G'day, Justin Hogg here from Right Source, talking accounting and budgeting in the great outdoors. So we've done a reasonable amount on the channel in terms of budgets and how we put them together, especially incremental budgets, and a couple of templates to help those who are looking to put their own budget together easily and simply. And we've gone through and done one before and putting a budget together in 10 or 15 minutes and showing you just some easy tools on how to do that. Now, one aspect that's quite interesting for businesses out there is if you're running a not-for-profit, or specifically if you're dealing with grants. Now, what I thought I'd do in this video is go through a way of where we've modified the incremental budget template that we had to allow you to incorporate effectively budgeting for grants and understanding how grants are affecting your budget and how they flow through for the next year. So what we're going to go through, and I'll bring it up on screen in terms of go through a computer template where we're going to go through two sheets effectively. One is going to be where we look through the grants that make up your business, and the next one is going to be then finalizing your budget over a monthly period so that you could then use that to report against. The reason why I think it's important to isolate your grants when you're looking at doing a budget is that grants can change and you don't have very much control of them in terms of a business point of view. There can be a change in government, there can be a change in what a government policy is, and quite quickly that could change your grants and that can have an immediate impact on your financials as a not-for-profit. By having your budget built around grants, what that'll allow you to do is when you're reporting to the board or you're discussing it with the CEO, if there's a change that's going to happen in a grant, it'll allow you to understand the impact that'll have very quickly on your business, and therefore allow you to adapt your business quicker than if you're unsure about what impact that's going to have and really having to start from scratch. So what we'll do is we'll dive onto the computer. We'll take you through an example of building a not-for-profit business or organization's budget using grants and see how we go. So what we've got here on the screen is basically a template that we started from last year's budget. And we've put a lot of the numbers in already, but I'll talk you through where we're at and what we've done so far. So effectively, this sheet here is breaking up your annual budget for your business into the core aspects or the core areas where it's receiving money. So the first column we've got here, which I've just highlighted, is core. So that effectively relates to your fundamental, your business. So your business without any grants. So we've got say you've got some income that you derive from providing services, so that's there. The donations that you might receive as your income, there's an estimate for that total amount that you receive during the year there. And then running down below that is your expenses that you'd have. So insurance, your wages for your core staff, which would be maybe your CEO or your ops manager and whatever core staff you have there that run the business at the center. Printing and stationery, rent, all that type of stuff. Just the stuff that allows you to be a business and operate at its fundamental. The next two things actually aren't grants. So I've actually put the next two areas of key donations, because sometimes what you'll get is a donation from a key benefactor that wants their donation to be spent in a specific way, and you want to track and make sure that that is done. So the next two options I've got there, where someone's given or is planning to give your not-for-profit a donation of $50,000 for the year, and they want that to be spent on computers. So then $50,000 in, $50,000 on computers. What you see at the bottom there is that there's no net profit or loss. So there's no surplus or deficit on that donation. And that's what you'll see with the donations and grants, is that they effectively, if they need to be spent on an obligation, won't provide any additional surplus that you can use to your organization. That all sits under your core. So the donations that you receive, the services you provide, they need to cover your core operating costs, because ultimately at the end of the day, any grants you get tend not to. Now we'll talk about that as an instance going further, but generally speaking. So that's the first donation we talked through, the computers. Then maybe there's another one that helps cover some of the cleaning costs or the laundry. So 10,000 in, 10,000 out. Then you get to your grants. Now I've just gone grant 1, grant 2, grant 3, but obviously it'd be better if you name these depending on what the grant is, what has meaning for you, whether it's the department or it's the use that you're using the grant for. But say, for example, you get a $400,000 grant in this example from state government, and that is used to provide services to the core people that you're helping. So therefore, most of that cost goes down into wages and salaries. So it allows you to hire more people, have more staff on. That's what that grant's for. It may also allow to cover some of the rent because that's where the people need to work. Then it'll all come down to what the grant document allows you to do. Understanding what the grant documents allow you to do, or what the grants allow you to do, is actually quite important. So in this first grant, we've got it as effectively, it allows you to employ staff and cover a bit of rent. And usually grants are very specific in terms of what costs they're allowing you to incur to achieve the goals of the grant. Now the second grant we've got there, which is a $200,000 example, has again for employees, so we've got $190,000 there. So it's again services being provided and allowing you to employ staff to provide those services. What we've got in this example is that some grants allow you to allocate some of your overhead costs for, which frankly I think is really important, because as a business, it's not just employing. To employ people, you need insurance, you need rent, you need stationery, you need computers, you need all that type of stuff. Now, it's very hard for a grant to say, oh, you can have one computer and X. What I like to see in grants personally is that allows you to maybe put 5% or a percentage of overheads in there, and that way you can cover some of that general operating costs of having your not-for-profit running as part of your budget. Now, we've included that option in this template, and that's what down on row 33, so I'll just highlight that, effectively being spent from the grant, and allows you to take $10,000 out of your operating costs and push that to the grant. And that's, again, it's important to understand what grants allow you to do this, so that when you're planning your business and you're planning that next year, you understand where your not-for-profit is sitting and whether you've got enough money to perform the services that you want to perform. And then lastly, we've got a third grant there that covers some project expenditure. So sometimes you might get a one-off grant to do some painting in the neighborhood, for example. It's a very specific purpose. You get the money, you have to spend it on that exact purpose. For those type of things, I like to have just an expenditure line, a project expenditure, so you're not really increasing the scope of your business. All you're doing is effectively helping solve one particular problem that might be there, and you're getting a grant to allow you to do that. By completing this sheet and going through your core business and then key donations you might be getting and grants that you know that you'll be receiving during the year, it allows you to get an aggregation of your business for the year to understand where you're at. So in the total column, we've got that there. We've got a small deficit of $1,600 or $1,700. You might want to tweak that and change some of maybe you want to spend a little bit less on advertising, or maybe you want to up your target for your donations, all those type of things. That's up to you. This is this first sheet of tweaking where you are for the year. Now, what I like to always have when looking at that is what happened the prior year. And then you can understand, oh, okay, well, what's different, and maybe make some notes so that you know what's going on. So, okay, this grant income from the state's gone up. Well, maybe there's an increase in services, which you then should see down in your wages as well. Well, you've got an increase in wage cost there, which relates to the increase in services. So, you can go through and look at some stuff. You're trying to cut down on office expenses by $3,000. Maybe they're a little out of control. We need to bring them back. It allows you to make sure that the budget is reasonable from an annual perspective. Now, the step I like to do next, because that's an annual budget, is then look at, well, what's the timing of that expenditure? Now, this sheet, simplistically, brings through the total that we had from the previous page, and is basically getting you to allocate that total across the months. And this check here is where things haven't been allocated. So, for example, this grant income for the federal, well, that $50,000 was that additional grant we're going to get, so we might just add another $50,000 in December, because that's when we're going to do it as a part of a Christmas gift somewhere, and then put the expenditure in there as well. So that ties that off. So then we've got computers and IT, where we're 19,000 short. Well, we might spend another bit of that here. And basically, by putting this through, it allows you to understand the timing of your expenditure. And then when we look down here, and especially if you let's get rid of these other variances just very quickly. We're going to cut down on our subscription spend as well. So obviously we're cutting some costs, which is trying to get those under control. Training, we've got way too much in here for training, unfortunately. Had a little bit extra in donations. Maybe we're going to run a little campaign in March and try and target a little bit more on donations. So that check means that this balance here, which is that balance there, your profit for the year, the $16.99 is the same as what we had on the previous page. So now we've spread it across the year, and you get to see that even though the surplus or deficit is quite small, month to month, you can have $50,000, $60,000, $70,000 swings in profit. Well, actually even more than that, up to $100,000 swing in terms of surplus and deficit. So in terms of that monthly spread, then gives you a feel, well, you need to have cash surplus of at least $100,000 to be supporting this budget. And from here, from this budget, it'd be quite easy to turn this into a cash flow forecast, and then bringing in some of your other obligations like super and PAYG when they're due, and your BAS payments and any capital expenditure, and have a cash flow forecast built off this quite simply. That basically is a simple way to put together a budget using grants and get that output that you'd normally see in terms of your month by month surplus and deficit. If you found that useful, definitely subscribe to the channel. There'll also be a link provided in the comments below if you want a copy of the template to use in your not-for-profit. If you want that, click the link, put in your details, and we'll send through a template to you straight away. And you can then use that if you want to watch the video as you use it for your own not-for-profit to put together your budget for your not-for-profit for the coming year. Absolutely. And if you do need any help, either send me a direct message through LinkedIn or put a comment in the comments below, and I'll definitely get back to you as quick as possible. But again, thanks for watching. Best of luck with your not-for-profit. It's Justin Hogg from RightSource.